Let's connect then with Rakesh Kumar Jain. He's the Director of Finance at GAIL, joining in on the show. Thank you so much for taking time out and being with us on the show. Let's begin by talking about the pipeline tariff hike, because there was an integrative tariff rate which was earlier submitted at 68 rupees per MMBTU. If you could just clarify to investors why we've seen different rates then at about 60 per MMBTU, and which is the rate that is being tracked and which is more important?
Yeah, so transmission tariff, as you know, is determined by PNGRB, the Petroleum and Natural Gas Regulatory Board. And in terms of the regulation, we are required to submit the tariff for their approval. So the number you are talking about is basically integrated tariff number, which GAIL has submitted to PNGRB for their approval. GAIL, based on the regulatory provisions, has submitted a number of 68 rupees plus per MMBTU. And the number which is coming in the PCD for unified tariff, that they have indicated that the approval will be around the indicated number will be 60.92. So what has happened today, currently the tariff is levied to end consumer is pipeline to pipeline. Basically, if a consumer uses one pipeline, the tariff for one pipeline is levied. If consumer uses more than one pipeline, the number of pipeline the consumer uses, tariff is levied based on contractual path. So PNGRB has come out with a concept of integrated tariff, which is a subset of unified tariff. So in terms of the integrated tariff, the physically interconnected pipeline tariff will be a single number. The GAIL has submitted the tariff for 9 of its pipelines which are physically interconnected.
Right. You know, the revision in transmission tariff is expected to happen by the end of this month or early next month. Are you confident that the rate submitted by you would be accepted, and what is the kind of benefit expected from the tariff hike to begin with?
So the purpose of the unified tariff is to increase the gas reach of the gas to far-flung areas. As I explained, currently the tariff is pipeline to pipeline tariff. It means if a consumer is sitting, say, in eastern part of the country and source the gas from western part of the country, the customer is required to pay the tariff of, say, HBJ pipeline, thereafter Jagdishpur Haldia pipeline, and standalone tariff for these pipelines will be around $3 to $4 per MMBTU. But if weighted average tariff is worked out, then the tariff comes out to $1.5 even on zonal basis. The PNGRB in its consultation has given the figure of rupees 80, that is around $1. So this kind of tariff will enable the reach of gas to far-flung areas and will enable increase of share of gas in an energy basket, which government also has a vision to increase the share of gas in energy basket from 6 to 15%. So that's how this tariff will help, and ultimately it will also help the investor in a sense. One is helping the customer by making it affordable to far-flung customers. Second, it will help to pipeline transporters, because the more volume, when there are more customers, there is more transmission of gas, so more revenue will be available to the transporter. So that's how it will be a win-win situation for development of gas market and also from the investment perspective in the transmission segment.
Sure, Mr. Jain, point taken, and we understand that the final order will be out only by the end of the month or start of next month. But at least for integrated tariffs, there was this open house that was held on March 6th, we understand. Could you talk to us about what were the discussion points, what was the agenda like, and what were the key takeaways from that meeting?
There was an open house conducted by PNGRB on March 6th, and more or less the issue discussed were around that only. The discussion was first not on the unified tariff, it was on integrated tariff. So the basically open house is conducted to understand what kind of views various stakeholders have, and then board listens to them and take account for them in finalizing the tariff. So the discussions were around that, what kind of submissions GAIL has made, what is going to be impact on that, what will be the change in revenue. what is the impact of, as I explained, the impact of capex, which is to be considered like Jagdishpur Haldia pipeline capex. What will be the impact of change in regulatory framework, and how this integrated tariff will help in unified tariff. So all those discussions had taken place in the open house, and board will consider the comments by various stakeholders before finalizing the tariff.
And given that spot gas prices have come off from their recent highs, are you seeing a rise in demand in your transmission volumes because of this? And could you quantify what the percentage increase it has been so far in Q4 compared to Q3?
Yeah, let me give you a brief background. This year has been quite a volatile year, particularly because of the geopolitical situations. We have seen the spot gas price as high as for the futures as published by Platts West India marker, as high as $69-70. Which is abnormally high if you compare even with the spot price of $10 to $12. So from that level, the spot prices has come down, and currently the spot prices are hovering around in the range of $13 to $14. So with the change in spot prices, the spot volume has now, spot volume market has come up, and it has increased. If you compare with the volume which was being supplied even by us 2 to 3 weeks back, it has increased by almost 4 million in terms of the quantity, 4 million per day, and in terms of percentage, almost 4%. So even though in spite of that increase, we are not at that level which we were supplying, but we on the yearly basis, last year we supplied a transmission volume around 111 million, and before this reduction in price, it was around 106 to 107. Now on currently it has come to 111, but then few more things has happened, because this is the spot price has not only has affected the market. Another issue which has happened because of geopolitical situation for our contract, we are not receiving the gas.
Right. But given the bigger fall in Henry Hub prices, the gas trading business has become favorable. For how long do you expect this scenario to play out? And are you able to sell all contracted LNG that you're now sourcing at profit?
So in terms of Henry Hub price has again gone up as high as $9 per MMBTU when the spot price were, as I explained, were higher. But with the spot price cooling down, the Henry price has also cooled down. Even we have seen the Henry price a week or so back around below $2 per MMBTU. But in terms of the future predictability, we have seen the Henry price to be range bound within $3 to $4 per MMBTU, except for the period of winter where demands are more, December to January. So even if you see the futures of the Henry Hub which are available, the prices are within the range of $3 to $4 per MMBTU, which is normal level for that Henry Hub price. So we expect that Henry Hub price to remain in that level.
Okay, I wanted to shift focus to the petchem business because that has been a tad bit slow. What's the situation on the ground at the moment? What's the utilization level?
So in view of the Gazprom issue, we were not getting the gas, so we put supply cuts to our own consumers, or 10% supply cuts, even more for some of the consumers. We brought down to supply or pay level instead of take or pay level. So because we were not having gas, we also ramped down production at our petrochemical plant, and we were producing around 40% of polymer as compared to 100% capacity which we normally utilize. So now since spot prices has cooled down, we have again started our polymer production at full level, and we hope that we will continue to produce polymer at 100% in coming financial year.
And when do you see a turnaround in the petchem business? How are your product margins looking right now, given that gas prices as well have fallen?
Yeah, based on the current prices, which is around, not current prices, based on the prices which were prevailing a week or 10 days back, around $14 to $14.5 the spot prices, we were able to recover the variable cost. But now since prices have further cooled down, So we hope that we will be recovering total cost, because two things has happened. Not only the input gas prices has gone up, but as compared to last year, our polymer prices has also came down, which used to be around 1 lakh 20 to 1 lakh 25,000 per metric ton. Currently it is around 1 lakh 14,000 rupees per metric ton. So that is also impacted. But now with China opening up and demand has increased, we expect that the coming financial year will be better from the perspective of polymer production and marketing.
Sure. So what is the status of propane and the LPG unit? I mean, is the plant running at 100% utilization as the APM prices are high?
Yeah, propane and LPG, we are working at a normal level. The level which is the kind of gas we are getting, we are able to totally produce and fractionate, and we are working at a normal levels.
And is the company using any spot LNG for any of its Gazprom volumes? Because that seems to be still not fully available at the moment.
First, we expect Gazprom gas to flow. We are continuously in touch with the supplier, and recently they have scheduled 2 cargoes to be supplied in March in this month only. So we expect that at some point of time they will start supplying us gas at a normal level. But in order to meet the shortage, we are not looking only for a spot. A spot is not for a substitution of long-term contract. So we are in discussion with various suppliers across globe for sourcing of gas, for at least for 1 MMTP of gas, so that we are not only able to take care of any shortage in the supply, but also able to cater to the new market which is coming up along our new pipelines which are coming up or which are being commissioned now.
And can you run us through what the status is of the fertilizer plants, by when they're expected to come online?
Fertilizer plants have come online. Only the 2 plants are in the ramping up stage, and almost all plants are working, and there will be further increase in terms of gas volume being marketed and transmitted to the extent of 4 million. Otherwise, almost all plants have come online.
Right. But recently China secured a 27-year contract with Qatar. Is GAIL also considering signing such similar contracts, given that new capacity is going to be coming up in Qatar from 2027? Are you in talks with any other party, as there are news reports also which are suggesting that you are in discussion to sign up a new Russian LNG contract?
GAIL as a company is always looking for increase of gas share in the energy basket, and that's how we are laying the infrastructure. Currently we are investing in 3 major pipelines: Jagdishpur-Haldia, Mumbai-Nagpur, Jharsuguda, and Srikakulam-Angul pipeline. And in order to cater to customers, not only to existing customer, in order to cater the customer which are coming along these pipelines, we are always in search of a gas at a competitive rate. Therefore, China has signed, of course, 27-year contract, but we are looking for certainly long-term contract, but the duration of contract will depend on the pricing, the kind of price we get. So certainly we are there in the market for sourcing of additional gas, and hopefully we will be able to click the deal very soon.
Okay, Mr. Jain, thank you so much for joining us today. We'll let you go on that note. For